So hi, this is Garrett Goggin with Gold Stock Analyst Silver, and today we've got Chris Ritchie, President of SilverCrest Metals. Hey Chris, how you doing today?
I'm doing great. How are you?
Good, good. I'm glad you're able to join us today. I just wanted to talk to you briefly regarding your most recent news. 31 million Canadian investment by SSR Mining. You know, this is a big deal for you guys because you were looking to fund your exploration over the next year. These guys came in, they offered you the cash at only 10% dilution. So, you know, it looks pretty good for you guys in the upcoming year.
Yeah, we've got the 31 million there, plus the 12 million Canadian we already had on hand, plus this upcoming Friday, December 6th, we get another $6 million of warrants that are coming in as well. So we're approximately $50 million in the bank with a budget in 2019 of approximately 30 million. So again, not many juniors are in a position where the next year is fully funded, which again, we're very fortunate to be in that position.
Yeah, no doubt. A lot of the financing that you see is dilutive secondary offerings where the price will, it'll be basically 10% or 20% in order to make the deal attractive. But you carry such a premium in the market, and your project is carries such interest that you were able to make that sale at a premium. What was it, like a 20% premium?
I think it was about 15% to a VWAP.
Okay.
Stock had been moving around a little bit before then, but it's about a 2% discount to our 52-week high. SSR is a company that's had 6 consecutive years of meeting or beating the street's expectations. They have about 490 million of cash. And I think for SSR, along with a lot of other people, given the commodity price environment today, there are not many projects that can stand on their own 2 feet at today's prices. And there's not a lot of people that have the money to put towards the drill bit, exploration, or growth. So again, it's a nice piece of validation from a very successful team that executes extremely well.
No doubt. They've executed very well, and they have a lot of cash in the bank that they can write a big check for. One thing I noticed in the news release that there's a standstill limiting SSR to 9.9% of the common shares out.
Correct. I mean, it's one of the strong points of SilverCrest is the management team prior to this deal owned over 15%, and our top 2 shareholders together owned about 20. So I haven't done the pro forma numbers, but you're still going to see the top 3 people owning about 30% of the company, and SSR coming in at 9.9. So we didn't need more money. So that's we took as what we needed. SSR would be a really interesting partner. But again, it's still something where the competitive tension, we believe, is still alive for a whole multitude of players to potentially show interest if they wanted to. And again, we'd probably be in the range of 10% additional dilution for us to become fully financed to move this project forward ourselves. So there's numerous paths we can go down, and we definitely do not need someone to come take us out to move it forward. But it does show interest for them and for others.
And that 10% dilution in order to be fully financed, that's pretty impressive because, a lot of projects have low returns and high capex, 100, 200, 300 million. I know your pre-feasibility isn't out yet, but you're thinking it's going to be below 100 mil for the capex?
We're going to have our PEA out Q1.
Yeah.
If you look at the 10 analysts that cover us, I think the range of capex they look at is between 60 and 90 million in that ballpark. Okay. That's a US dollar figure. So when I say 10% approximate additional dilution, I am assuming we take on about 30, 35 million of debt and having a plug of about 30, 35 million of additional equity that we would need to raise. So again, in this market, that's a very manageable number. So again, that does show a huge visibility of us being able to move this project forward, again, at today's prices. Right. Because again, you take those same 10 analysts, their average IRR in and around today's prices is probably around 60 to 70%.
Right.
And we're one of the few projects that we do not need the commodity price to go higher in order for us to add value in the short, medium, and long term.
Right, no doubt. That IRR number, that's very impressive. A lot of projects move forward at only 15%, 20% for a lot of gold projects. Basically, you can look at IRR, and that is your return on investment per year. So if you're getting if it's a 60% IRR, you're getting 60% return every single year, which is absolutely off the charts. Back to that SilverCrest, the 9.9% cap. You said that is due to competitive interest continued in your firm. So you wanted to keep the communication open with other interested parties, right?
Well, potential. I mean, we do chat with all the parties that are out there. I think when I say competitive interest for others, it's making the point that very few people have put money towards the drill bit over the last 1, 2, 3 years. Very few people have economic projects at today's levels. So if you kind of fast forward 1, 2, 3, 4 years, there's numerous producers that are traded at a much higher PNAV multiple than we do that have to deal with their maybe less than robust pipelines in such a way. So the fact that SSR is sub 10%, we're not a captive party just to them. There's the potential that other people might be interested. I'll kind of leave that up to investors to make those assumptions.
The reason why I bring that up is because Arizona Mining was a favorite of ours, and that got taken out by Cell 32, and they did a similar deal. They did a secondary at about a 30% premium, and I believe they bought about 9.9% or 10%, and then they added another 10% at the market over the next few months. That was interesting. That added some good buying power that pushed the stock up. But Arizona Mining, the secondary went off at $1.84, and then it got taken out at $4.77 like a year later. So what we see going on with your stock is similar to what we saw with Arizona Mining right here.
Yeah. Interesting though too, because we have that 50 million Canadian with a budget of 30 million next year, we are a tightly held stock. What you're seeing right now is a little bit of the warrant hedging right now. We do have some people that are a little overweight, or again, just taking some profits in the short term here. Any piece of news that we're going to be coming out with over the next year, whether it's 9 drill rigs turning, another resource coming out in Q1, the PEA coming out, hopefully a permit, hopefully the market conditions changing, will not be met with a financing. And again, that's a unique position versus a lot of the other junior companies that haven't been as fortunate on this side or haven't dealt with their capital needs. So again, I think the next little while is going to be more about supply and demand. I think the next 1, 2, 3 million shares will help clean this up nicely, and then you've got this hopefully a nice window to move things forward. If and when the market starts to take a turn, us finding the marginal buyer, or us being able to deliver one of the many catalysts we hope to have.
Right. Excellent. So to sum it up, I just want to explain to the viewers why this project is so attractive. I'm looking at the slide from your presentation that shows the grade versus other America's primary silver deposits, and let's just 623 grams a ton, and high grade leads directly into low cost, which leads directly into increased profitability, which leads into the total value of the project. So the SilverCrest Metals project is 4th in the Americas, and now this is your entire resource. This isn't even considering your if you split off Area 51, and then it says in your presentation that your grades would increase to over 1,000 grams per ton. Now, the resource update that you're going to be doing, it's going to include a lot of recent drilling results from Area 51, right?
Correct, and it's an important note to point out. With our current 57 million ounces averaging over a kilo silver equivalent cut and diluted, the analysts would look at that as the first 3, 4, 5 years of production. So the normal re-rate that happens from an explorer code developer to producer, we've got more than enough there at that grade to bridge that gap. But that 623 grams a ton on average that you noted is the 4th highest in the Americas. So again, it's us being able to front end load that high grade is very significant. But we kind of win both ways, or potentially win both ways. If we find more high grade, we can sequence that to move it forward in the mine life, or the NAV accretion potential is significant there. But if we also find more scale, meaning if we just add tonnage, we have the chance to take a conceptual project that's 1,000 tons a day and maybe increase that to 1,250 or 1,500 and get economies of scale, more ounces, quicker payback, higher IRR. So at this point, we can win with any more tons that we find today, and then it's a bonus if we can find more. That said, our recent drill releases that came out about a month ago were infill drill holes between our two best holes, and they were almost double the grade and significantly higher grade. So you're getting lower risk now with us being able to move some of that inferred resources over to an M&I category over the course of 2019 with more drilling.
Excellent. That Area 51, it's part of Barbacoa, right?
Correct.
Is it part of Barbacoa Norte or just the straight Barbacoa?
Well, this is also another part of the story that's interesting. We've got 57 million ounces of over a kilo in two veins that are about 300 meters apart. So that will be shared infrastructure in the early days. The other 5, 6, 7 parallel veins are also an additional 200 to 300 meters apart. So there again, there's the sort of healthy leverage that we talk about, that if we're successful on more veins, the underground development to access more tonnage is very low. The decline that we're building today to access Bobby Norte and Bobby Canora is probably a neighborhood of $3 to $4 million. So again, if we open up that whole area, it might be in the neighborhood of $8 to $10 million. So again, very low cost to very potentially accretive ounces should we be continually successful with the drill bit. And also to note that so far we've been finding ounces at less than 30 cents an ounce.
That's cheap. Yep.
That, if you put that on a gold basis, it's about $25 an ounce of gold.
Wow.
And look at the average finding cost per gold ounce over the last 10 years, it's been about $174 US.
Yeah.
So finding ounces cheaper than other people, we're finding higher margin ounces cheaper than other people.
Right. More profitable. So my question would be regarding mining methods. So you've been finding a lot of mines, a lot of veins, very high grade, and you said within a few hundred meters of each other. So you see a decline going down, you see multiple faces being worked at the same time on multiple veins?
That's the plan. I mean, the PEA will be out in Q1. That will give a better clarity on the sequencing and the like. In terms of a width and understanding, at 1,000 tons a day, we aren't going to be pulling massive tonnage here. So we can be more selective with our mining method in order to prevent or at least limit dilution to a certain extent here. The main Area 51, 1.1 million tons, is about 3 meters wide. Bobby Canora Norte is about half a meter wide at approximately 3 kilos. What you'll see in our presentation in the resource is that we did dilute that down to 1.5 meters at just below a kilo to take into consideration dilution on that point. So again, we have taken all that into consideration. So again, we don't have to be overly aggressive in terms of the tons per day to get good returns here. But again, any more ounces, any more working faces, any higher increased width, veins, and tonnage we find is all just de-risking and economies of scale.
Nice. The resource update that you're coming out with, where's the most of the drilling happening right now? Is it in the Area 51 Barbacoa area, or is it on the other veins?
Half of the drilling will be infill so that we can move some of the inferred resource to an M&I and get some more confidence as we move towards a production decision.
Okay.
So that will be an Area 51.
Okay.
So that helps with in terms of clarity on the first 1, 2, 3 years of production. But we will see expansion drilling on Bobby Norte, expansion drilling Bobby Canora, and then also on Bobby Sur. So again, that would be really interesting there if we find anything on that additional vein, because that's more working faces, that's more tonnage. If it's high grade, it's gravy. If it's low to medium grade, it's increased throughput, better economies of scale.
Right.
So at this point, any success we find is going to be very incremental.
Right. Excellent. I appreciate it. Is there anything else you'd like to share that we haven't touched on yet?
I think just for generalists or people who haven't looked at the space, I think one of the most important things to note on our story is that we have time on our side, that we don't need the commodity price to recover, and we have money. So I think for people to take a nibble and looking at the big picture and how beat up this space is, we're one of the few names that can ride out 2019 without having to do a big dilutive financing, and we can add a significant amount of value, hopefully, without needing that commodity price to move higher. Now, if we start to get some more positive results, if the market starts to turn around, you get that tailwind with below average risk. So again, we're trying to suggest to people that there's an asymmetric risk reward opportunity here. And if we can get people just to nibble, and then every time they see some positive results, or hopefully positive results, they can just continue nibbling here.
Right, I get it. I agree. So thank you, Chris Ritchie, President, SilverCrest Metals, and Garrett Goggin, GSA Silver, signing off. Thanks for joining us.
Thanks, Garrett. Appreciate it.